Welcome to another video in the house with Charlie. My name is Charlie Porter and I am a realtor here in the Central Florida area. So today's video is pretty much going to be about mortgages, okay? Going to be a two-parter. So first part, we're going to go and look at the background of things and how we got started with these particular secondary market mortgages. And then the second part of the video, we're going to go into the more details about things that you may already be familiar about. You probably heard these terms before: FHA, VA loans, or a conventional loan, but we'll go into more detail about that on the second video, so go ahead and stay tuned for that, okay? So now let's go ahead and get started with this very first one, okay? First thing that you need to know is there are three terms you need to know regarding these mortgages, okay? That is Fannie Mae, Ginnie Mae, and Freddie Mac, okay? Those three terms are going to be the back end of why these secondary mortgage companies have been created and why at this particular time in 2021 you're probably looking to buy your home, and what different steps that you're going to go through and different terms that you're going to hear with your realtor or the lender that you're actually working with, okay? So let's kind of jump back. We're in the 21st century now. Let's jump back to the 20th century, okay? Early 20th century. Before 1938, there were only a few major lenders or banks that were operating and passing out mortgages to anyone who was actually buying a particular home, okay? So you have to know that particular background first, because the competition was very low. So it's almost as if you had just Walmart, Target, and let's just say Publix, and those were the only three places that you could shop, okay? You can only shop at those three, which is fine, but they could raise the prices because guess what? That's the only place that you can shop, right? So that's the same thing that happens with those mortgages and banks that were around at that particular time. So the government, they do not like monopolies, okay? So what they did was they stepped in and said, hey, okay, we know that we need to give more affordability to anyone else who may be in a lower income and they cannot pay those particular high interest rates, or just spread out the competition. So now we have 15 different people who are actually lending rather than just those three people. And then the market will just fluctuate how it goes. Interest rates, some may be higher on this end, some may be higher on that end. You just never know. But it depends on where you are in the country at the time, things like that, your local market, things like that. So you just have to know that pretty much, that background, right? So first thing that was created, 1938, was Fannie Mae. The second thing that was created in 1968, that was Ginnie Mae. And then the third one was Freddie Mac, and that was started in 1970. So we're going to go over all three of those, kind of give you a little bit more background on those. Now, all of these are pretty much government-backed agencies. Now, Ginnie Mae may not be as government-backed, and we can get into the logistics and things like that, but pretty much everything is government-backed at this point. They all started because they wanted to provide more assistance to the people who may be in lower incomes, or even people who are in higher incomes, and just give them more options too as well that they can actually look at, right? So those mortgage-backed securities, they work with, like I said before, FHA loans, conventional loans, and VA loans. Now, all three specialize in certain ones, okay? So they all can go across the board with those particular three, but they kind of all were created between certain times because of certain things, and they are started before a specific loan, right? So now these are similar to any lender or financial institution, right? These three boards here: Ginnie Mae, Fannie Mae, and Freddie Mac. Now, with those three, they are the financial health and stability of the home buying market, okay? So if their organizations decline, then that means home ownership will become more costly and less accessible for everyone to be able to get those particular loans, okay? So you just want to know that too as well, because that's giving you the background of why you're talking about these particular terms and where they're coming from and how that affects the market, because a lot of this is across the country. This is not necessarily specific on your market as much as it may be at a national scale. So you want to know that part too as well, right? So now let's jump into what these government agencies do, and I'm gonna get a little bit more specific with each one, how they go. Starting with Fannie Mae and Freddie Mac. Ginnie Mae, I'll get to that one at the end. They have a little bit of different logistics of how they kind of work on different things, right? So they function as any other bank, right? So pretty much what they do is they sell the particular mortgage on the secondary market on the back end, and they sell those to any investors, pension funds, insurance companies, or hedge funds, okay? So what that does is that gives them the security of, if you were to default on your particular home, that gives them the security of, hey, I still have money on the back end and I can sell that to someone else who can actually start to pay that mortgage. Now, listen, these particular lenders and banks, they do not want to hold these houses, okay? So if you were to default on your house or you go into foreclosure, things like that, they do not want to keep that house. They just want to keep the mortgage and keep the payments coming in, which is fine. But at the same time, when you do default, that they technically now own that home, and they don't really want to own it. They rather give it to someone else who is willing to pay it, an investor who's willing to pay it, or just a homeowner and a family. When it comes to duplexes, different families can be living in that particular area. So that's really what it comes down to. So they don't really want to own it. That's why they sell it on the secondary market. And then that gives them the back end security. Again, if you default, now that's what you have in place, okay? So now, for Fannie Mae and Freddie Mac, they're not only secondary market lenders, but these organizations, they also set the regulations and guidelines for mortgages for depository and non-depository institutions. So depository institution, that'll be something like a commercial bank. Those are like your major banks. Probably you will see, they are the tallest buildings probably at your in your particular city or your market, right? Now the non-depository ones, those are kind of be your smaller lenders. Those that you may know someone who works there in a sense. They're around the corner, few far in between. They're very local in where they're actually necessarily located. They may not be expanded across the country like a commercial bank, where you can get that those major loans and things like that. Okay, so that's the main thing that we need to know about that. Now, with Fannie Mae, typically those mortgage loans are from commercial banks or big banks, right? So again, those are your major banks that we're talking about. We can jump into, you can go Chase Bank, you can go SunTrust, Wells Fargo, those major commercial banks that are all across the country. Those are the main ones there, okay? Now, whereas when it comes to Freddie Mac, those are more for your smaller banks. So those are for your small lenders. Again, that's why I said they're few far in between, probably locally in your market. You probably see it once, probably won't see it again if you go to the next city. But it just depends on how big they're expanding. Some have 2 or 3. So just kind of depends on your particular market, okay? Now, with those particular loans, right, Fannie Mae and Freddie Mac, they're typically for conventional loans. And again, I'm going to make a second part video too as well. So stay tuned for that one. I'll get into more details of what a conventional loan is versus a VA loan and an FHA loan. So we'll jump into that later, okay? So with those, like I say, those are particularly for conventional loans, which are not insured by the government. Now, I know I said earlier that everything is pretty much government backed. It is in a sense. Once you start getting down to the nitty gritty of the details and the specifics, some may be backed a little bit, some may not be backed a little bit. But we'll jump into that again. Stay tuned for that second video, okay? Now, for Fannie Mae, again, I said that they were started in 1938. So they were pretty much the first one there, okay? So they were created for FHA loans, okay? So they were mainly created for the FHA loans, and it helped increase the number of lenders, like I said. So it increased those number of people that are actually in the market that you can actually go through and shop with, okay? So now you don't just have Walmart and Target, or you don't just have just the Publix. I know some people have Kroger where they are too as well. You have multiple options now to where you can go here, you can go there, and whatever works out for you, that's what works best for you, okay? Now, Freddie Mac started in 1970. That's a mortgage backed for conventional loans, mainly for conventional loans. Now, that operates under HUD, and HUD is pretty much the development, and they were started back in a while too as well, but they're pretty much the Department of Housing Development. So those are the main ones that they were created for, okay? And they were created mainly for conventional loans, but they can buy and sell FHA and VA loans as well, but that's just not their niche. That's not why they were technically created. But again, things happen, things move. It is what it is, okay? So their goal is pretty much to put home ownership in reach for minorities and rental housing affordability. So they kind of go for the lower tier, lower income people, and they just help them out to where they can actually buy a home even if they may be at a different credit score or lower credit score, different financial situations. Just depends on where you are, okay? Now, the last part here is going to be for Ginnie Mae, okay? This one was actually started in 1968, and it operates under HUD too as well. Again, I said Department of Housing and Urban Development, okay? So that's under HUD too as well. Now, their mission is to create and operate mortgage-backed securities for FHA and VA loans. So that's their main niche, is FHA and VA loans, okay? Now, they more than likely can go into the conventional market. They do different things, but that's just how it goes right now, okay? So that's their main thing, and then there's a USDA loan too as well. I'll throw that in the next video too as well, so we can kind of round that out and make sure we understand all of the options that you do have as a home buyer, whether you're a first-time home buyer, second-time home buyer, you're buying your 10th home. Doesn't really matter. So with that, now again, I said they specifically go for non-conventional loans, FHA, VA, USDA. Now their goal is to have guaranteed mortgage-backed securities since 1970, but they help open the mortgage market. They help open the mortgage market for first-time home buyers and low-income borrowers too as well. Okay, so they were kind of working on their own niche again for FHA and VA and USDA loans, to where they can be helping affordability for lower income people. Okay, so they all kind of work entwined. Again, these three main things: Ginnie Mae, Freddie Mac, and Fannie Mae. Those three entities, they pretty much run the secondary housing market. You want to know that, because when they fall, the housing market not necessarily falls, but it can become less accessible for you to get a particular loan. So you just want to know that. You want to just have the education on that. And again, I'm going to give you the details on the other loans too as well in my second video, okay? So just stay tuned for that one. But I hope you guys enjoyed this one. If you do, go ahead and like, comment, subscribe, share it to your friends too as well. I want this to be an educational thing, not necessarily even if you're looking to buy a home right now. This will be something that you can come back and look at and understand what terms maybe your realtor is going over, what the lender is going over to as well. So you just have the education and have the options that you want, okay? So again, like, comment, subscribe to the YouTube channel In the House with Charlie. I appreciate you watching this video, and I hope you have a great rest of your day.